Welcome to the Fuller Tracy Money Audio Commentary. This is Owen Tracy recording. It's 2:41 p.m. That is Central Time, and today is February 20th, and today being Friday, it's the big picture, long-term audio and video for the various different asset classes. I thought that I would use some point and figure charts today to talk about longer-term trends. And right now we're looking at the NASDAQ over the last 10 years or so. What I find particularly interesting is that if we go and look at the 20-year chart, it doesn't really look all that different, other than the fact that we haven't really moved higher on the last move over the last maybe couple of weeks. Now, one of the most important things about a point and figure chart is that it doesn't really pay attention to the lower band where we have the time axis. It's only looking at price. So when prices are rising, then you'll get blue X's. And then it's a 3-box reversal, and it's a 2% chart. So that means it would have to fall by 6% in order to have a decline or another column of red circles. So that I think is particularly interesting because it doesn't matter what kind of timeline you look at. If you want to look at 50 years, 20 years, 10 years of data, what you have is a very big trend. And that really helps to emphasize that we've had just an incredible period of time where technology stocks have done particularly well. Even though there have been periods where they've underperformed, more often than not they outperform, and when they outperform, they do especially well. And that, I think, has been one of the most significant factors in how people have been invested. And over the course of the last decade, it was the only place to be. Now, let's then look at another index just to put into context that kind of outperformance. Well, that's a very different looking chart. It's the FTSE 100. So we can go all the way back and we can look at that peak in 1999. And that was the beginning of an awfully long period where the market didn't go anywhere. And now it's really just broken on the upside. Then let's think about something else that has gone sideways for an awfully long time. This would be Japanese banks. And here we are treated to a lot of back history. And then you have this just profound downtrend. And you can see that there is just a rivetingly consistent sequence of lower rally highs. And it lasted for what feels like forever. Because we had a good-sized rebound back in 2003. And it really looked like that might be the end of the bear. And yet that bear market persisted for another decade. And now it is finally rallying to break that sequence of lower rally highs. So what we have here are some examples from point and figure charts where we can see secular trends in evidence.